Normally, each week on the channel, I spotlight a different one of my investment portfolios. Well, today I'm going to be doing something a little bit different, and I'm going to be going over all 21 holdings in three of my accounts, which are my Webull taxable account, my Webull Roth IRA account, and my Chase Roth IRA account. I'm going to be going over how much I'm down on each of these positions. I'm going to be going over the safety of the dividend as well as what positions I'm going to be adding to so that I can dollar cost my way down. And therefore, once the market does return back to its normal condition, I'm hoping that I'll be up on all of my positions and my portfolio can see some amazing gains. I'm sure all of you are aware that President Trump just declared us in a state of emergency. This virus outbreak has now been declared a pandemic, and the market is in a bear market condition. Therefore, stock prices are going down, investors are panic selling, and people like myself and others in the YouTube community, well, guess what? We're getting quality companies, quality dividend paying companies at an amazing discount. And what I'm planning to do is increase my dividend income. I am Marie Brown. This is my channel, Minds in Motion, where we talk about personal finances, investing, and how to become the best version of ourselves. Let's jump into the video. So what I've done ahead of time is I've uploaded all of my positions into the Simply Safe Dividend website. And as you can see here, it says my portfolio, a combined overview of your three accounts. So just looking here before we look at the 21 holdings that I have in these three accounts, it shows you here that my annual dividend income is $272, and that is based on right now the companies that I own, the dividend yield, and how many shares I have. So this month I am projected to receive $34, and then this just shows you for the next 12 months my projected payout for the companies that I hold, and that's how they came up with the total of $272. If we go back, as you can see, my balance and performance, it says my portfolio balance is $4,755, and that's with all of the loss that we have been experiencing in the stock market. My volatility is average. Currently, I am up 8% or $352, but my total loss is 19.9%. $1,179. That is how much I've lost, since the stock market has been experiencing these volatile days, or the volatility in the market, excuse me. The next thing that we're going to be looking at, and the thing that we're going to be focusing on, is dividend safety. But before we do that, let's look at dividend growth, because I am a dividend investor. I am a long-term investor, and I want to make sure that I'm dollar cost averaging down on the positions that are in my best interest. So it says dividend growth. Here's how your portfolio would grow its income over the past decade, assuming the dividends were withdrawn and not reinvested. So if I just were to take the dividends and not reinvest them last year, my dividend percentage would have only been 2.7%. In the last 5 years, it would have been 5.3%. And then in the last 10 years, it would be 6.9%. So this is just giving you a basic overview of how your positions or how your stocks would be performing. The next thing that we're going to look at is the diversification of my holdings. And as you can see here, I need to add some utilities, materials, information technology, and healthcare. So these are some of the sectors that I'm going to be focusing on while the stock market is trading at these all-time lows. I want to make sure that I add some companies in these four sectors so that I can have my portfolio more diversified. As you can see here, 38% of my holdings are real estate, 20% are communications, 12% of financial, 12% consumer staples, 10% energy, 5% industrial, and 2% is consumer discretionary. So as you can see, it does give you a good overview of where your portfolio is weak and where your portfolio is strong so that you can get your portfolio evened out. So I will be working on that over the next couple of weeks, is to get the portfolio evened out. And then here we have an evaluation. So my current dividend yield is 5.72. My yield on cost is 4.58%. And then it says, what is yield on cost? So yield on cost is a common metric cited by dividend investors as they manage their portfolios. But is yield on cost really relevant for successful dividend investing? And then here is a article on what yield on cost is. I'm not going to get into all of that because I don't want the video to run too long. But what I do want to do now is I want to go over the holdings. And then once I go over the holdings, I'm going to go over the dividend safety overall of the portfolio. So as you can see here, Archer Daniels, I have 3 shares. My average cost, because I put this in after I bought the shares, is $37.23. The current price is $34.64, and it is 2% of my portfolio. I have a 7% loss, and the dividend yield for this particular stock is going to be 4.16 over a 5-year average. But as you can see here, that's what I like about Simply Safe Dividend. It tells you the safety of the dividend for your holdings. So per Simply Safe Dividend, this particular stock has a divvy safety rating of 94, which is very safe. So I will be adding to this position to try to average down to the current price. Next, we have Ben Franklin Resources. As you can see, I own 10 shares. My average cost is $26.62. It is currently trading at $18.11. It is 3.8% of my portfolio. And as you can see, I'm down 32% on this particular holding. Again, the average dividend yield is 5.96. And again, it has a very safe dividend rating of 98%. So this is another company that I will be adding to this week in order to bring down my average cost. Next is a ETF that I own in my Roth IRA account. I own 20 shares. It is currently trading at $24. My average cost is $27.62. It is 10% of my portfolio. I am down 13.1%, and it has a dividend yield of 3.86%. Now, the thing that I did notice about this website is that it really doesn't give you dividend safety on ETFs, which is not a big deal, but it does show me here what percentage this ETF is of my portfolio, as well as how much I'm down on this position. So I am going to be adding to this position as well. Next, as you can see, this is one of my more controversial stocks because I own 6 shares. The average cost is $38.82. It is trading at $17.51. It is 2% of my portfolio. I am down 54.9%. But as you can see here, the safety of this dividend is very low. It has a 30 rating, which makes the dividend unsafe. So I will not be adding to this position at this time. Next, we have Leggett and Platt. I own 2 shares. My average cost is $37.49. It is currently trading at $32.44. It is 1.4% of my portfolio. I am down 13.5%. The average dividend yield over a 5-year period is 4.93%. And the dividend safety is barely at a safe condition because it is at 61 rating, and that's just barely safe. Next is another one of my more controversial stocks, and that's Meredith Corporation. I own 12 shares. My average cost is $31.86. As you can see, it is currently trading at $22.47. It is 5.7% of my portfolio. I am down 29.5%, and the average dividend yield over a 5-year period. As you can see, it's very high. It's 10.59%, and it is borderline safe. It has a dividend rating of 50. Next is Altria Group, ticker symbol MO. I only own one share because I just started buying this as it's been going down the past couple of days, I would say. And my average cost is $39.80. I am up. It is trading at $40.07. I am up not even 1%. And the dividend yield over 5 years is 8.39%. It is borderline safety as well. It has a 55 dividend rating. Next is MSM, ticker symbol for MSC Industrials Direct. I own 3 shares. My average cost is $77.17. It is currently trading at $53.29. And as you can see, it is 3.4% of my portfolio. I am down 30.9%. The 5-year average dividend yield is 5.63%. And this company has a very safe dividend. It is a 84 rating. And as you can see, the dividend growth is 19%, and they consider that to be very fast. So I will be adding to this position. And then we have Realty Income, ticker symbol O. I own 15 shares. My average cost is $74.75. It is currently trading at $71.92. It is 22.7% of my portfolio. I am down 3.8%. It has a 5-year dividend yield of 3.88%. Again, it has a very safe dividend at an 86 rating. The dividend growth for this company is considered slow. It's only 3% over the last 12 months. And then we have Occidental. I'm pretty sure that all of you are aware of what happened with Occidental. They recently had to cut their dividend by about 86%. And just so you guys know, with Occidental, their dividend is still really not safe at the rate that oil is trading at. There still is there's still room to cut the dividend again, but I currently own 7 shares. My average cost is $33.77. It is up compared to the last few days because it was trading around $12. It is currently trading at $14.26. It is 2.1% of my portfolio. I am down 57.8%. It has a 5-year dividend yield average of 3.09%. And the dividend is still unsafe at a 30 rating. And right now, based on the dividend cut, it is very slow at a negative 64% over the last 12 months. I will definitely not be adding to my position of Occidental right now. Next, we have People's United Bank. I own 15 shares. My average cost is $15.86. It is currently trading at $12.86. It is 4.1% of my portfolio. I am down 18.9%. The 5-year average is 5.52 on the dividend yield. It does have a safe dividend rating at 79. It does have a slow dividend growth, but it is a dividend aristocrat, and I probably will definitely be adding a few more shares to get my average down to the $12. Hopefully it stays down there this week. Next is a ETF, PGF. I own 4 shares. My average cost is $18.77. It is currently trading at $17.29. It has a 5.54% dividend yield, and it does have a fast dividend growth at 8%. Then we have the monthly paying ETF, SPHD. I own 15 shares. My average cost is $40.69, but it is currently trading at $33. So I definitely want to add some more shares to this because I own this in my IRA account, and it is 10.4% of my portfolio. I am down 18.9% for a 5.53% dividend yield, and the dividend growth is average at 7% over the last 12 months. Then we have SPYD, which is another ETF that I own in my Roth IRA account. I own 5 shares. My average cost is $37.68. It is currently trading at $27.92. It is 2.9% of my portfolio, and I have a loss of 25.9%. It has a 6.25% dividend yield, and it has a fast dividend growth over the last 12 months of 8%. So I definitely will be adding more shares of this ETF to my IRA account. Then we have AT&T, ticker symbol T. I own 10 shares. My average cost is $37.09. It is currently trading at $34.47. It is 7.2% of my portfolio. I am down 7.1%. The 5-year dividend yield average is 6.03%. It does have a safe dividend at a 65 rating, and the dividend growth is pretty slow at 2%, but AT&T, for some reason, is just one of those companies that I love. So I definitely will be dollar cost averaging down on AT&T this week to try to get down below this $34 range. Next is another ETF, THW. I only have 1 share. This is also on my Roth IRA account. And as you can see, I am up 0.2%. It has a 12.4% dividend yield. And this is a pretty new ETF, so it doesn't even have a 12-year dividend growth, as you can see here. Next is UVV, Universal Corporation. I own 5 shares. My average cost is $53.93. It is currently trading at $42.42. It is 4.5% of my portfolio. I am down 21.3%. The 5-year dividend yield average is 7.17%. And as you can see, it does have a safe dividend with a 75 rating. It does have a slow dividend growth of only 1% over the last 12 months, but it does pay a very nice dividend. I also own this company in my Roth IRA account, so I will definitely be adding more shares as I feel like it is trading at a good price, especially based on my average price. Next, we have the ETF VYM, which is the Vanguard High Dividend Yield S&P 500 ETF. I own 4.05 shares. My average cost is $87.07. The current price is $74.37. It is 6.3% of my portfolio, and I am down 14.6%. It has a dividend yield of 3.69%, but it does have a good dividend growth of 7%. So I definitely will be adding more shares of this to my portfolio while it is trading below my average cost. Then we have VYM, which is the International High Dividend Yield ETF. I have 4 shares. My average cost is $60.60, and it is currently trading at $47.20. It is 4% of my IRA account. I am at a 22.1% loss. It has a 5.68% dividend yield, and as you can see, it has a nice 11% dividend growth over the last 12 months. So I will definitely be adding more shares of this ETF as well. Then we have the REIT, Whitestone REIT. I own 10.53 shares. It is currently trading at $9.91, but my average cost is $13.53. It is a REIT, and you know that REITs have to pay out a portion of their income. It is only 2.2% of my IRA account. I am at a 26.8% loss over the last 5 years. The average dividend yield is 11.50%. It has a slow dividend growth. I don't think that the dividend has increased for years now. So as you can see, the dividend is very unsafe for this REIT at a 8 rating. And last, we have ExxonMobil. I have 3 shares. My average cost is $62.09. It is currently trading at $38.12. It is only 2.4% of my portfolio. I am down 38.6%. And the 5-year dividend yield is at a 9.13% average. As you can see, the dividend is borderline safety. Let me know in the comments below what companies you guys are going to be buying this week. Last but not least, I want to say thank you so much to all of you who have been supporting the channel and helping the channel to grow. If you haven't yet, make sure that you subscribe to the channel, hit that like button, and turn on the bell notification so that YouTube alerts you when I make other videos like this. Thank you guys so much for tuning in, and I hope you have an amazing day and just keep investing.